Hi guys, it's Thomas here from COTbase.com. I'm back and today we're going to have a look at the 30th COT report of 2013, and as usual we're going to start off with the changes in commercials positions. So here we go, soybean meal on top with a 26% change in commercials positions, a large change also in large speculators, and an even greater change size in small speculators positions. You can see the changes over here. All this happening after a steep decline in prices. So this is a bullish signal, as you can see. The change size is larger, much larger than average. And let's have a look at the chart and see what happened to soybean meal when there were large changes. You can see back in the past there was a great change back over here. Prices only reacted after the next larger than average change size. Then we've got another example over here. This was actually an effective signal just preceding this rally over here, and then we've got another one over here. So we can find a few examples when large changes affected prices. Let's move on and have a look at the 5 years chart and see how extreme this market really is. Here we go. You can see that basically for commercials, large extremes would happen if they're at roughly 40,000 contracts net long, or at net short of roughly 125,000 contracts. They're basically in between, so we can't really talk about a major extreme. We may talk about a relative one. You can see a couple of times back over here in the last 2-3 years. Prices did move to even relative extremes, and we're getting to those levels basically. But a really unquestionable huge extreme would be, as I've said earlier, at such levels. Moving on to Russell 2000, we have a 20% change in commercials positions over there. This is a bearish signal that you can see. Looking at the chart, finding a similarly large change over here. You can see prices reacted for a few days, even actually 2 weeks basically afterwards. Then we've got another example, and of course we've got opposite examples as well when we had a bullish change signal. Let's have a look at the 5 years chart and see whether we've got an extreme. You can see prices are in a huge rally mode and all over indexes. So the question is, would we reach a bearish extreme soon? Well, you can see we had one a few months ago basically. Then we've moved away from that extreme level. We're getting closer to it right now, but I believe we're still a bit far from those levels, so the rally may easily continue in Russell 2000. Moving on to soybeans, we have a 17% change over there. 13 in large speculators and 28 in small speculators positions. Of course, the chart is really similar to soybean meal. These markets do correlate with each other. So the question is, do we have an extreme in soybeans? Well, as you can see on the chart, basically the picture is really the same, basically very similar that we have in soybean meal. A huge bullish extreme would be if commercials could be in a net long territory. You can see on this 5 years chart that whenever they were above the zero line, that really coincided with bottoms in prices. We're not there yet, but we are definitely getting closer and closer to that. Of course, we can also find relative extremes on this last basically 2 years. You can see that there were some occasions when we had a relative extreme in the market. But of course, these are much difficult to find. A huge all-time extreme is much more easier to be found on a chart. Moving on to large speculator COT Extreme. Here we go. Australian dollar, S&P 400, and crude oil on top. Let's open Australian dollar first, where we've got that all-time extreme in large speculators positions. Let's move on to the 5 years chart right away. Here we go. You can see prices are declining pretty rapidly. We've been analyzing Australian dollar in the past couple of reviews, and I was telling you that this major extreme may easily push prices higher. But as you can see, the extreme is still there. It's not moving away from this extreme territory. We may easily see actually this extreme widening a bit before we reach really the bottom in prices. So it's a very interesting market. You have to have your eyes on it and expect that prices sooner or later will reach their bottom. Moving on to S&P 400, all-time extreme also over here. And of course, the chart is very much similar to that we've seen in a Russell 2000. We're going to open the 5-year chart just to see this extreme on a wider perspective. Here you go, large speculators at all-time extreme levels. Commercials are very close to their all-time extreme. Small speculators are really the ones that aren't at an extreme level. They're pretty much neutral with their roughly 6,000 contracts net long position. So as you can see, concerning large speculators, that's already signaling us that we're getting closer to the top. Of course, indexes correlate with each other, so if we don't find a similar picture in S&P 500 and NASDAQ and Dow Jones, I believe this extreme may widen even more. Crude oil is our next market, our last market for the week. We're going to open this chart and see what's the case. We have an all-time extreme. You can see actually prices reacted to it last week, but now we see prices rallying again. So the question is, would this extreme widen even more, which would mean that prices could easily continue their rally, or it's just a little bit of a rebound and we're going to find prices continue their decline as we move away from these extreme levels? So, you know what? I'm going to show you another market, lean hogs, but that's going to be our last market for the week. Just a bonus for you guys. Opening the 5-year chart, we're going to see this all-time extreme. I'm showing you this because it's not only large speculators that are at their all-time extreme levels, but also commercials, as you can see. So we've got a pretty large extreme in lean hogs. Also, small speculators are getting closer to their extreme level. So the picture is pretty much big over here. Stress levels are huge, and as you can see, of course, this is a very bearish signal, as you can see on the chart over here. Whenever commercials and large speculators were at such extreme territories, that usually coincided with the tops in the price, as you can see on the chart I'm showing you. Okay, that's all for this week. If you would like to have a look at other COT charts, of course you can do so at our COT charts page. If you'd like to have a more in-depth and detailed COT analysis one, check out our COT analysis page. You can add other useful functions to your table, look at new COT report types like CIT, TIF, disaggregated, and of course you can look at other data types also. A lot of great functions. So I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.